All right. Hey, good morning, Adam. How are you?
Good morning, Chad. I'm doing well.
Awesome. Awesome. So, hey, wanted to thank you for taking a little bit of time and hopping on here to explain the VA loan. Something I'm real passionate about. I purchased my first home with a VA loan. So, definitely know some perks of it, but you know more about it than I'll ever know. So, before we get started, can you just tell me a little bit about yourself, how long you've been a loan officer, what state you're licensed in, where you live, just stuff like that, basic information?
Sure. And before we get started, Chad, I didn't realize that you were a veteran that you had served, so I certainly appreciate the service there.
Well, thank you. No problem.
But any case, I've been in banking for about 18 years. I've been originating now for about 10 years. Currently live in the Oglebay area of Wheeling, but I was born and bred in the Ohio Valley, so the entire 38 years of my life, this is all I've known. Anyways, we as an organization are actually licensed to do business in the District of Columbia and all there are 47 of the 48 contiguous states. So the only state right now outside of Alaska and Hawaii that we as an organization can lend in is for some reason Arizona, although I hear that might be changing soon. They might be added to the list. Now, me personally, I can originate in almost every one of those states in some fashion. So for those states that there's restrictions based on product or things like that, we have a centralized team that we can refer out to on that. So pretty much if they live in the contiguous United States outside of Arizona, we as an organization should be able to help them in some capacity.
Awesome. So, hey, what overall, can you explain to me like just the high level of what a VA loan is?
Yeah, absolutely. So I think everybody kind of understands generally what it is, right? It's through the Department of Veteran Affairs. It's a program set aside by the federal government to help active duty and retired military buy a home with as little as zero money down. So, in a nutshell, that's what it is. Now, there are some misconceptions as we think about the VA loan, Chad. I think you just touched on one. You do not have to go through one of these service-related credit unions or banks to obtain a VA loan. A lot of local lenders do offer a VA product, and for those that don't offer a VA product, may have in-house product that would serve those who served us proudly. Yeah, and obviously thinking about the VA loan and how it's kind of different than most other loans, there's really no PMI. I say that sort of with a caveat because they do most of the case they will have a funding fee in lieu of PMI. Chad, you probably know that, and that percent starts at 2.15% with no money down. And for the first use, and on the second use, subsequent use, it could go up to 3.3%. Now, what I said potentially a funding fee because that funding fee is waived if the borrower had a service-related disability. So the VA then will waive that funding fee. But no worries to the clients. You're not paying that funding fee out of pocket. It's generally going to be able to get financed back into the loan.
Perfect. So, what are the pros, for the veteran that's eligible for it? What can they do? Seller concessions, stuff like that. What's
Yeah, yeah,
entitled with that? What are the positive side?
absolutely. So we already talked on one. It's going to allow these veterans to get into a home with no money down. Obviously, that's probably the biggest pro. When we're talking about concessions, and here's one that, Chad, I'm not even sure that you knew, and I would argue that probably most people don't know, as it comes to seller concessions, they have seller allowances and concessions. So the seller can not only pay the buyers and total closing costs with little restriction. On top of that, they can actually give 4% in terms of seller concessions. So they can pay the closing fees plus another 4% for these other items that are considered concessions. Now, one of the biggest things that I think people don't know is that seller can actually pay off or pay down buyers' debts in order to help them qualify. And I have one example of this in the last couple of years that we used where we did structure the loan accordingly. The buyer didn't qualify because the debt to income was too high. We asked the seller for concessions. We use those concessions to pay off, a high payment credit card that the buyer had that's paid off, debt to incomes are in line, and we sail through to closing.
Awesome. Yeah, I did not know that. So that's news to me.
Yeah. So it's a great feature. And I mean, like I said, if you're structuring a deal for a veteran and that debt to income's too high, that's something that's holding you back, that's an excellent solution.
Perfect. Yeah, that's something I did not know. So thanks for sharing that. So what are
Sure, sure.
some issues that could come up with a VA loan? Like, so if we say a negative side of it,
The cons,
yeah, the con
yeah.
of it. So what are you thinking?
Okay. Yeah, yeah, potentially. I mean, obviously, the one that comes to mind is it's only obviously available to an active duty or retired military person and their spouse. So, one of the cons to that is we get these situations, and I'm sure you've seen them before, where boyfriend and girlfriend want to buy a house together,
Mhm.
fiancés want to buy a house together. The problem with that and how it pertains to the VA, they will only allow a co-bar to be on there to use that bar's entitlement if that individual is a spouse. So in the case of a boyfriend, girlfriend, in the case of fiancés, that the active duty or retired military person will have to qualify for that loan on their own. So, and the other one, I don't know that it's necessarily a con so much, but VA tends to put more weight on what they call residual income.
Okay.
And residual income differs from debt to income in the sense that it's really how much money do you have left after your debts are paid, after your taxes are pulled from your paycheck, after your debts are paid. How much money do you have left after that? And so that could be a con to, we'll say, low wage earners because, maybe they have 20% taken out of their check for taxes,
Hmm.
so you're making $2,000, 20% is taken out, you net 1,600. You have an $800 mortgage payment, you might have a car for $500. Now your residual income, if you did the math, would be about $300 there. So the VA is pretty specific with how much money somebody should have residual income after their debts are paid. So in Ohio is actually in the Midwest region for the purposes of that calculation, and West Virginia is in the southern region. Fortunately, though, they have the exact same. Those two regions currently mirror one another in terms of what they expect the bar to have left over, and it's adjusted based on household size. So, for example, a household size of one, so veteran only in the house, we'd want to see them have around $382 left after everything was paid.
Huh. They break it down with the real science, and that's an exact number, right? So I also
Yeah,
think
yeah.
it's entertaining that West Virginia and Ohio back and forth, just total different regions there. So it's
Different
just
regions,
funny
but
when
the
you
regions mirror one another. So yeah, go figure, right?
yeah, I got lucky, but it's like, when you can see it from your front porch, it makes things kind of a little funny there. So, is there any other things that you think can make it difficult for getting a VA, like, credit scores, anything like that, income credit? What are some big things that people need to take
Yeah.
into account if they are a veteran?
So the product itself as a whole does not actually have a minimum credit requirement. Now, most banks will have some sort of overlay, things like that. Outside of that, I mean, we talk about other government-backed loans and the appraisal. I mean, if you're thinking about it, maybe the appraisal would be a challenge, although, because it essentially uses the same appraisal type as your FHA
Mhm.
and your USDA loans. So we are going to want to see no peeling paint. We are going to want to see GFCI next to water sources and pressure release valves with the drop leg and all that fun stuff. I
Don't
don't
forget
know
those
that that's
handrails.
necessarily a restriction because as long as you have a good real estate agent like yourself, Chad, you've already prefaced that to the seller that these are going to need to be done. And so I don't know that that's necessarily a con. Now, the VA will also require a pest inspection. I
Right.
think out of most products that are offered right now, I think it's one of, if not the only one that actually requires the pest inspection. And as weird as it is, that pest inspection is like 40 or $45. VA says the borrower, the buyer cannot pay that fee, which was always kind of comical to me. You could
Right.
pay $5,000 in, attorney fees, origination fees,
Lender
appraisals,
fees.
but you
Don't forget
better not
the
pay for
funding
that
fee.
$45 pest inspection.
Yeah. Don't forget about that funding fee too. That's a big one. That's, but
Yeah,
hey,
yeah, you
the
could do that.
$45, no, that's too much. We're drawing the
That,
line there.
no. And I'm
That's
sure there
awesome.
was a reason at some point.
So is there anything we're missing on the VA loan? Anything else we should, talk about to share with anybody or anything you can think of?
Yeah, so one last thing, and I mean, obviously, we could go on for hours and hours and hours and hours. And I would say that one, no two clients are the same. So if there's any specific questions, obviously we could take them off chat. We could talk about them one-on-one. But one of the things that I think a lot of people don't know is this idea of assumability. And you're probably a little bit familiar with it, Chad.
Mm,
But what assumability does, and the VA allows for assumability, is that you can actually give the remaining terms of your loan to a potential buyer of your house. Um, and we're seeing that a little bit more now, especially with the rates where they're at. So somebody
right.
had bought a house 4 years ago, 5 years ago at the 2.5% rates. That's pretty attractive now to be able to sell that house to somebody and give the remaining terms of that loan over to a new buyer. I guess the downside of that would be is that if you do offer an assumable loan to somebody else, their entitlement, their ability to get another VA loan
Mhm.
in the future is still going to be partially tied up in that house, unless the individual assuming the loan also has their own entitlement, which they could switch the entitlement over to that active duty or retired military person.
Okay.
But yes, you can certainly give that over to a lay person, somebody who had not served in the military. So, that could be kind of attractive to a potential buyer.
Awesome. So I know you said it best there when every situation is a little bit different. You've kind of got to figure it out piece by piece. If a veteran's watching this now, how can they get in touch with you? What's the easiest way to reach out to you so they can get
Sure.
your contact information?
Yeah, absolutely. Probably the best way to reach out to me, especially in an urgent situation, is my cell phone, which is going to be 740-582-9421. They can text, they can call, they can also email adam.brothers@truist.com. And then I do have a website set up, which is truist.com/adam.brothers.
Okay. Awesome.
And
So
they
we'll
can
put all
apply
that.
online and get all the information that we're talking about via that website as well.
Perfect. So I'll put all your information down here below and it'll be on the slide here in a second. So I wanted to thank you, for your time. So, thanks for sharing some information and helping everybody out there. So looking forward to do some more business with you here soon, sir. So have a wonderful day and we'll chat soon, man.
Thanks so much, Chad.
All right. Have a good
Talk to
one.
you soon. You too.